Welcome to Impact, bringing you global developments likely to affect Sri Lanka. This week we cover China's strict COVID measures likely to continue, Sri Lanka's tourism to suffer. Global food prices continue to drop, helps tame domestic inflation. Oil trending lower despite planned cuts to oil production. US dollar continues to appreciate, widening Sri Lanka's trade deficit. Chinese President Xi Jinping is expected to secure an unprecedented third term at the Chinese Communist Party Congress this week. This is likely to mean that Beijing continues with its current policies. Main among them is the dynamic zero-COVID strategy, which strictly limits foreign travel by its citizens. Impact on Sri Lanka. During the 9 months to September 2022, only about 3,000 Chinese travelers visited Sri Lanka. This is in stark contrast to the roughly 210,000 who arrived in the same period in 2018, which was prior to the Easter Sunday attacks and the COVID-19 pandemic. The Chinese government's extra cautious approach is impacting the island nation's troubled tourism industry. In a welcome sign, the Food and Agricultural Organization's food price index declined for the 6th consecutive month in September. It noted that the downward trend is driven by a sharp fall in prices of vegetable oils and moderate decreases in sugar, meat, and dairy products, which offset rebounding in cereal prices. However, recent unprecedented floods in several countries may affect prices in the near to medium term. Impact on Sri Lanka. Sri Lanka imports about $1.5 billion of food and beverage each year. An attempt to convert to organic fertilizer placed the country's entire food industry in peril, driving food prices almost 95% higher. A decrease in global prices will significantly benefit the Sri Lankan consumer. The US dollar continued to strengthen as investors are expecting another round of interest rate hikes come November, with rates peaking at around 5%. Relative to a basket of foreign currencies, the US dollar is currently at a 20-year high. Impact on Sri Lanka. The overall impact is negative. While a stronger dollar helps Sri Lanka's exports, it makes imports more expensive, exacerbating the current trade deficit. Also, the higher rate that US treasuries now offer will see further capital outflows from emerging markets, such as Sri Lanka. Global oil prices are trending lower despite the OPEC and Russia agreeing to a 2 million barrel per day production cut. However, Reuters reports that oil prices are expected to remain volatile as production cuts will tighten supplies ahead of the European Union embargo on Russian oil, while a strong US dollar and further interest rate increases in the United States limits gains in oil prices. Impact on Sri Lanka. Sri Lanka currently purchases most of its oil in the spot market due to the country's dollar shortages. As such, volatile oil prices affect the country's current BOP issues. And that's a wrap for this week. Join us next time as we update you of global developments impacting Sri Lanka.